Jerome Powell announces a rate cut in September, and Bitcoin's buying force has already made its move. What can we expect from its price development? Will buyers continue to push forward? Last Friday, August 23, in one of the most anticipated interventions of the year, with central bankers, economists, and ministers from around the world in attendance, Jerome Powell, the chair of the Federal Reserve, announced that the time has come for interest rate cuts. This announcement sparked significant enthusiasm in financial markets. During the annual Jackson Hole Symposium, Powell highlighted that inflation in the United States continues to decline towards the 2% target set by the Fed, signaling a shift in monetary policy. However, he did not provide specific details about the timing or magnitude of the cuts, though he hinted that they could be implemented in September. The Federal Open Market Committee will meet on September 17 and 18 to decide the next move on rates. Over the past year, the Fed has maintained rates within a range of 5.25 to 5.5%, the highest level in 2 decades, as part of its strategy to curb inflation. This policy has started to show effects on the labor market, which has begun to lose momentum, reinforcing the need for a rate adjustment to avoid a recession and achieve the much-desired soft landing of the economy. Powell emphasized that the direction of monetary policy is clear, but he reiterated that the pace and timing of the cuts will be determined by the ongoing analysis of inflation and the state of the labor market. With an economy showing signs of cooling, the Fed faces the challenge of balancing its decisions to maintain growth without reigniting inflation. Jerome Powell stated, "It seems unlikely that the labor market will be a source of elevated inflationary pressures in the near future. We will do everything possible to support a strong labor market as we move towards price stability." However, the Fed chair was clear in noting that any decision will depend on the evolution of economic data and the risks that arise along the way. The financial community now eagerly awaits the next FOMC meeting to gain clarity on the immediate future of interest rates in the United States. These are undoubtedly good news, as we saw weeks ago when Europe became the first to start lowering interest rates. And now the United States has finally confirmed its intention to begin cutting rates once and for all. And what nobody wants to see drop, without a doubt, is the price of Bitcoin. The reality is that we've recently experienced very positive times for the crypto ecosystem. As you might recall, when the price was around this point, we were already saying that it wouldn't be long before Bitcoin and the crypto ecosystem could enjoy an upward path. We're considering all of this as part of an accumulation process. The institution is defending this accumulation by supporting the purchase, and in such processes, we often see a previous supply line acting like an ascending staircase before breaking the creek. And that's what we're aiming for here. Remember, we're working with hypotheses, and this is just an idea. We'll see how it works out. It's important not to take everything too seriously. We need to be very open to see how the price develops today, tomorrow, and whether any updates are needed. As I just mentioned, we've been evaluating for weeks that this might make more noise before moving up, and just today, a few hours ago, the situation shifted. Maybe tomorrow it will shift again, or the day after. We have to remain very open to change. If we zoom in a bit on the Bitcoin chart, you'll see that during a live stream on Crypto Insight, when the price was at this point, we were telling the community that we expected an immediate explosion in Bitcoin's price. This really looks like it's going up. Friends, I'd be buying retracements across the entire crypto ecosystem, and if they don't want to retrace and want to break out now, because they might want to break out now, I'm telling you, this already has a lot of strength. If you ask me, we could see a crypto explosion soon, and a strong one, very soon. It really looks like it. It really looks like it. As you've observed, when we enter a good working dynamic, it's crucial to continue supporting the ideas we've been working on. It's true that we've been analyzing Bitcoin's defense zone, and in previous videos, we saw how the asset absorbed bearish attacks. We also noticed how the supply line was signaling a potential breakout, leading us to dismiss the idea of time consumption before the break, and instead, we changed our perspective to say we're close to a breakout. As the event approached, we pinpointed the exact moment when this could happen. This emphasizes that if something works for you and continues to work, you should keep supporting the idea. However, you must have nerves of steel to be able to discard an idea you've been working on for weeks and change it based on updated information you're seeing in the price action. That's why it's important to continuously update your analysis. Take a look at Ethereum. When the price was around here, we mentioned that it wouldn't be long before it recognized the creek, pulled back, and then sought a breakout to the upside. For me, the work is already done. Everything is very mature. They might create a previous defense zone or a supply line, and then Ethereum could take off. As you know, in the market, we use cross-analysis, so the movements we're expecting often replicate across different assets. In the case of Polkadot, when the price was at these levels, we were anticipating a pullback in the price to the structure, which was previously drawn differently, as you'll see in the flashback. The line passed through here, and we expected the price to reach this structure before looking to the upside. Look at the 15-minute time frame. We've marked this defense zone between $4,650 and $4,640. These are key points that the price should respect. We might see a trap, and these are also good entry points to try and surpass this high and consider a flat pattern. Then, we might unload a bit and keep the rest in case it breaks out. And now, if we turn to Cardano, you'll see that we were previously working on this defense zone. When the price was at this point, we expected a downward visit to the defense zone, followed by a subsequent explosion to the upside. I really like Cardano. I like it a lot. It's already set a trap, you know? It's already set a trap. So let's test it. It can be tried. And if you're now wondering what we expect from Bitcoin's price after seeing this aggressive buying force, I'll share that with you in a moment. But first, welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity. So, as you're looking at the Bitcoin chart on the 1-hour time frame, I want you to pay close attention to this structure. This is the creek we've been tracking for weeks, while also keeping an eye on this defense zone. Now, earlier, I mentioned that as we got closer to the event, we changed our outlook from expecting a bearish time consumption before an upward explosion to thinking that this wouldn't happen and that a breakout was imminent. I want to share something very interesting that we've identified right here, and for that, we'll use cluster analysis of this asset. The average retail investor is undoubtedly seeing a doji here. Many investors, due to its simplicity, study chart patterns, a discipline that has been tested by researchers and has unfortunately been shown to have a negative success rate. Therefore, the use or study of chart patterns is not recommended. Let me show you why. At this point, everyone was seeing a doji, a small body like the one you see here with a long wick over a significant structure. Let me ask you, what is the average retail investor seeing? A doji. And here's something else. What is a beginner in order flow analysis seeing? They're seeing an ask, an exaggerated buy that can't sustain itself, and therefore, if the price closes down here, there are trapped longs, meaning the market should fall. That's what everyone was thinking. But look at this. Contrary to the masses I showed you in the Crypto Insight live stream that right after this candle, when we were here, we were expecting immediate explosiveness. First, smart money creates the illusion that the market is going to collapse. In other words, deceives you. Smart money has no interest in you, the retail investor, buying and joining the rally, because sooner or later, you'll get excited about your profit, want to close your position, and place sell orders as the price rises. Remember, smart money wants to drive the price up, so your sale is not in their interest. That's why these scenarios, these illusions are created. Essentially, what we have here is what's known as staking, compulsive. It's true that the candle closed downwards, but look at what the price did next. It started to rise, not with one candle, but with two. Now, you have to ask yourself this. Do you think smart money, which is objectively heavily invested in buying, is going to allow itself to be in the negative for long? Look, frankly, they've created the illusion that we're heading straight to disaster, when in reality, it's clear that they've gone long and the rest is history. What I just explained is crucial to understand because in this traditional 1-hour Bitcoin chart, we've been observing an event that has already taken place here. We see the major explosion we expected to happen immediately. And now, knowing that smart money is heavily invested in the long side, we're going to follow the price action with this defense zone. It's important to note that the price hasn't made any kind of retest at the origin of the break in the structure. If you ask me, we have a hunch that this structure won't be revisited. We think an attempt might be made to reach it, but it will fail. Just look at how Ethereum has reached a structure we consider key, a macro creek, and now the price is being compressed against it. If we see that Bitcoin has already broken its creek and has moved away with great confidence, while at the same time Ethereum is still within accumulation, the financial markets might be tempted to try and test the community or in Bitcoin under this hypothesis. Meanwhile, Ethereum could be compressed against its creek, aiming for some separation at some point, perhaps to reach a target or an ore in an advanced accumulation process. Then both Bitcoin and Ethereum, as well as other assets, could start to rise. But do we have any guarantee that we'll see this bearish phase in Ethereum before it goes up, and this bearish phase in Bitcoin that we believe won't reach the ore before it rises? Is this bearish phase guaranteed? Of course, there is no guarantee here. If we were to say there's a guarantee in financial markets, we'd be fools. Wink, wink. But as you know, at Crypto Insight, we work seriously, honestly, and with a wealth of experience. As we've been saying, this bearish phase doesn't necessarily have to happen immediately. We're going to look for a structural indicator. You'll understand this shortly. We have a bearish impulse here, and everything to its right is a correction. This correction can be labeled with a W, a weak I, and a Z. We won't dive into theory here, but many times, Z's collapse into rising wedges. Here, we see the break, the black swan, and then the immediate consequence of breaking that wedge. So, now we're looking for that key structure that will define whether this correction is going to attempt to reach its trend line. A mere attempt, not an obligation to touch or contact it before rising. Or if instead, the structure of the Z, this line here, will act as the pivot. We believe they are trying to create a trap right now as we record this video, and this could indicate that the Z has not been broken, meaning we might continue to rise. With what we've explained earlier about Bitcoin and Ethereum, where we mentioned that Bitcoin might attempt to seek lower levels, though we believe it won't reach the ore before rising, we've posed the question of whether this bearish phase will happen. The answer might come from Cardano. How? Simple. If we break this structure convincingly, it's likely that we will experience those bearish phases in Bitcoin, Ethereum, and the rest of the crypto ecosystem before the rise. But if we see that Cardano creates a fake out, something like this, and then recovers, it's likely that those bearish phases won't occur, and we will continue to rise. And here, of course, there's much more that we're analyzing. We're looking for trading opportunities in Bitcoin, Ethereum, Cardano, Polkadot, Solana, among other assets. But that kind of in-depth analysis, where we identify specific key points for potential buy or sell entries. We host this in our free private community where we go live daily. And finally, the day has come to tell you that today we are launching our free private community for our English-speaking audience. Let me show you what we do in our Spanish-speaking community so you can see what we're going to start doing today with our new English-speaking community. In this Telegram channel, we go live daily, looking for trading opportunities focused on the futures market. This Spanish-speaking community has 520 users, and I'll tell you, their participation is very high, as you can see. They share their charts, trading ideas, and more. And after watching many members who follow our live sessions day after day, we can clearly see how their trading skills have improved. Over days, weeks, and months, they keep improving their trading strategies. This is a constant. And starting today, August 27, 2024, we will begin this same dynamic with the Crypto Insight community, with our English-speaking community, where, of course, all the live sessions we do daily will be 100 in English. So, let me explain how to join our community. Now you're seeing on the screen the access form for our Telegram channel, Crypto Insight Premium. To join our community, you just need to meet 3 requirements. The first is to be a user of Bitunix or BidFi using our referral code. In the form, as we're zooming in now, you'll find the referral links. The second step is to have deposited cryptocurrencies into your account with a minimum value of $100. And the third requirement is to use this account as your main futures trading account. In other words, trade actively. Once you've met these 3 requirements, you'll be able to fill out the access form, where you'll be asked if this is your first time accessing Crypto Insight Premium, and for everyone, the answer will be that it's the first time. You'll be asked for your name, your email address, and which exchange of the 2 available you will use to access Crypto Insight Premium. You will also need to provide the UED identifier of your Bitunix or BitedFi account. Keep in mind that the Bitunix UED has 9 digits, and the BitedFi UE has 19 digits. Then, you just need to provide your Telegram username. Remember, every Telegram username starts with an @ followed by text and/or numbers without any spaces. For example, at JezaCrypto 2024, all together and starting with an @ Then, you click send, and within 72 business hours, we'll grant you access to our new Crypto Insight Premium community, so you can join us live. During these live sessions, we enable a chat where you can interact with the entire community and get your questions answered. So, don't hesitate too much, as spots are limited. Don't wait too long. Secure your spot now. Also, if you register with our referral code from BuyDFI and make a deposit, you'll receive 10 of that deposit as a futures trading bonus, with a maximum deposit value of $200. Additionally, by reaching a futures trading volume of 400,000 USD, you'll be credited with $200 in trading bonuses. And by reaching a futures trading volume of 800,000 USD, you'll receive $400 in trading bonuses. Similarly, with Byte DeFi, there's no need for KYC, know your customer, and you won't need to use a VPN to access and trade, since you can do so from anywhere in the world. The same applies to our friends at Bytunix. No KYC is required, and you can trade without a VPN from anywhere in the world. Additionally, if you register with our Bytunix referral code, make a deposit of $100 and trade futures at least once, you'll receive $20 in futures trading bonuses. By reaching a trading volume of 1 million within a month, you'll receive 0.5 Solana. That's right. In tomorrow's video and within the private Crypto Insight Premium community, we'll provide the details of the Bytunix and DeFi campaign. Secure your spot and don't waste any more time. Meet the 3 requirements and we'll see you in Crypto Insight Premium. We've left the link to this form in the description and the pinned comment of this video. Join our live sessions and improve your trading skills. If you enjoyed the advanced technical analysis we do here at Crypto Insight, let me know in the comments. Also, give the video a like, subscribe to the channel, and click the bell icon so YouTube can notify you of future updates. We look forward to seeing you at Crypto Insight Premium. See you next time.